Hey traders, Raghee here. Apart from the volatility this morning we saw as the market was digesting the news about New York City and the requirement for vaccinations and just what that alluded to in terms of the fear of another lockdown. Look, the market just went into a frenzy. We had a market that looked like it was ready to move higher. And then suddenly about 10 minutes to 10 a.m. Eastern, we saw the rollover right during the clearing session. Market bottomed out near the 14,850 level on the NASDAQ. And we can see that the trend that has been intact continues to stay intact. And in the premium video, by the way, I'm going to dive into the importance of the daily time frame to day traders, because the daily time frame really did show us where the line in the sand was for the shifts in psychology. But let's talk about another psychology that futures traders and stock and ETF traders can keep an eye on, and it was a setup that we had here today. Now, if I'm looking at the NASDAQ as a futures trader, it's really important to remember that we're also looking at XLC, XLK, and XLY. These are the top three weighted sectors within the NASDAQ. Now, if we want to take another deeper dive from index sector to now individual stock, it takes us to Microsoft, Apple, Facebook, which actually has an interesting potential buy setup on the daily, Goog and Google, and Tesla. These now are heavily weighted stocks, both within the NASDAQ and the S&P. So the idea here is what? Futures trading and relative outperformance. Now, it's not that I don't trust the NASDAQ futures. I do. But I also know the NASDAQ futures in many ways are sort of, I don't want to use the word plagued, but they're sort of going to be moved by the volatility that we're seeing in Amazon and in Tesla. And that's going to affect the XLY, consumer discretionary corner of the NASDAQ. By the way, I wanted to mention this. I think Amazon's move today was actually a pretty important one. Heads up for Amazon. I've been getting a lot of questions about when that's going to start to look viable again. And of course, the proxy for that would be XLY. And if you're interested in these kinds of breakdowns, relative outperformance, index sector stock, check out the free replay of my webinar from last night over at simplertrading.com/scale-replay. And you can see a lot of these kinds of setups that have been the staple for me throughout 2021. So what's the idea here? Is it still going to be a bullish environment for equities? I'll tell you what. That if you've been following my breakdown of seasonal tendencies, I will tell you a couple of things. Seasonals are not setups. Setups are tendencies. Tendencies are not trades. So we know there's a likelihood for something to potentially happen. It doesn't mean that there's a setup based around it. So as much as there tends to be this overwhelming bearishness going into August, last month of summer, and then as we have this concern about the variant and the effect on economies and potential lockdowns, we got a glimpse of what that might look and feel like today, right in here. Take a look at the way in which the market sold off. This is the New York news. And then did what? Caught a bid and rallied. I am not going to assume that the markets are not going to play 1 and 2 steps ahead of, uncertainty and bad news and say, look, if we're going to fade this someday, if we're going to fade this, why not do it now? That really has been the way in which the markets are responding. I wish I had the details. I saw a tweet earlier today that talked about one of the banks said that the way in which the market is recovering from retracements, recovering from sell-offs, has shortened to such an unbelievable period where sometimes the recovery is taking hours, if not days, recoveries that used to take weeks, if not months. Now, if I can find that tweet, I'll share it with you guys in an upcoming video. But the gist of it is that the market is sort of front running. As soon as they get bad news, as soon as we as a collective market are getting bad news, We're saying rather than fading it later, let's just fade it now. And look how quickly the market recovered from that move lower. And I do believe this is exactly the way August is going to behave. And that lines up with the in-depth walkthrough about seasonals that we had on Friday. The idea that this market's cornered and has to sell off in August really doesn't pan out when you look at the 5-year look back on the seasonality. Yes, we could see a lot of volatility. I mean, we're seeing that right now. But the idea that we're going to see a big move like this, I don't think it's the Federal Reserve that's going to trigger it. It's going to be something pandemic, vaccine, lockdown related. And if we got a glimpse of how quickly today the market recovered from that news about New York City, I'm feeling that this is going to look a whole lot more. The month of August is going to look a whole lot more like this, giving us opportunities for those double green dip buys. I'm very excited about this month. There's no reason to phone it in. We actually got 2 or 3 setups out today alone. So I'm looking forward to what August could give us. I'll see you in the next update. Hey traders, Raghee from Simpler Trading. Thank you so much for watching this video. Be sure to leave a like and a comment below. And remember, subscribe and click the bell icon so you'll get notified of the next update. And when you're ready to join me for live trading, be sure to head on over to simplertrading.com. I'll see you in the next update.